Hello traders, Gary Wagner here just before 12 noon in Honolulu, 6 o'clock in New York. It is Thursday, March 28th, 2019, and this is the Daily Report for Gold and Silver. We did see a major drawdown across the board in the precious metals markets with the minimum decline over 1.5%. There has definitely been some chart damage. We'll talk about that as we pull up our technical studies. Gold closed down about $20.80, and basis most active April is at $12.8960. When we look at our June contract, that is at $12.95. Of course, we had our stops at $12.9713, so we sustained a small loss of just over $6 per ounce. Silver next had a decline of about 2%, closing below a key psychological level of $15, losing about 31 cents today. Platinum also really gave it up in terms of 2.17% at $837.90, but the cascading market that fell the most was a 100-plus day in terms of decline, the second in a row. $1,315 in palladium after losing $106 or $7.46. Now, you might think that this was driven by a strong dollar, and in fact, the dollar was pretty strong, up over 0.5%, 96.805. However, when you have declines in gold of 1.5%, you can realize that only half of that, 0.5% was due to dollar strength. The remaining decline of 1% was all due to selling pressure. Let's take a look at our technical studies. Traders, no doubt a tough day for gold bulls or precious metals bulls as a whole. We had a major decline in the markets across the board. We are looking at April gold, currently after market trading up about 10 cents at $12.9540. The major chart damage that I am talking about is the fact that we had mentioned that yesterday we closed just above the 50-day average, and my sense was I thought it would hold, and my sense was that if it did hold, we would see the market return to rally mode. However, I also said any kind of major break, and you should take your stop to the market. For those that did, they sustained less of a loss than we did. We let our stop run its course, and we'll talk about that when we pull up the June contract. But the fact of the matter is, once it broke below the 50-day moving average, you had a series of stops being hit and a cascading effect as this market lost about $20 on the day. On a technical basis, we don't really have support until this bottom that comes in at around $12.80. That's about $15 from here. However, it could find some sort of support here if it was a one and done, but that's something we'll have to determine over the next couple of days. And traders, in terms of the June numbers, I've just pulled up our candlestick chart for daily June gold. We can see that pretty much the same thing happened in terms of breaking below the 50-day moving average. Again, it was above the 50-day moving average yesterday. It opened at the 50-day moving average and cascaded lower. Now, we're much closer to a bottom in terms of price point in the June contract because that bottom comes in at around $12.87, and we are now at $12.9530. We have seen June gold become the most current contract. Let's take a look at silver. Now, traders, as far as silver goes, we already sustained some major chart damage. That occurred really back at the beginning of March when pricing took it below the 50-day moving average. It has stayed below ever since. Now, we broke below some key levels today in which the close today in silver broke below not only the 200 but also the 100-day moving average. It also broke below the 0.78% retracement. So while there was already some chart damage in this market, we had a further decline in pricing. And traders, because platinum has been under so much pressure lately, and it was the one that performed the least in terms of upside moves, we're seeing the least amount of drawdowns in terms of chart damage. And the reason I'm saying that is not because it lost over 2% today. That obviously is a very sizable drop. But what I draw your attention to is as follows. We've got our three moving averages, our 50, 100, and 200 day, and interestingly enough, platinum is the only precious metal to have a price point above all three moving averages. My belief is that platinum and palladium are going to come into alignment if in fact they switch their use of palladium and catalytic converters to that of platinum because of the price differential. That would mean that basically arbitrage would come in and even these prices out. But traders, as I said, it was palladium that has thoroughly gotten devastated over the last couple of trading days, over a $200 drop in 2 days. We can see that the market yesterday closed just below its 50-day moving average. It opened just below its 50-day moving average, and it traded to a low of roughly 1309 and closed currently at 1315, down $106 on the day. In terms of technical levels to watch, 1288, that is the 0.38% retracement, and then the 100-day moving averages at 1309. Those would be the levels to watch to see if in fact this market finds support at some point. However, traders, if in fact it breaks below 1288, that 0.38% retracement level, we could see a continuation of the meltdown, and that would be a parabolic fall. Again, we talked about this over the last couple of weeks, but specifically yesterday, we focused entirely on the possibility that history might repeat itself in palladium, where we've seen a parabolic rise and parabolic fall. If in fact pricing breaks below 1288, it could go much lower, and that target would be the 0.618% retracement, which resides at 1106. However, I still believe because of the fundamentals at play, meaning that there is a artificial supply issue in that Russia is holding back the palladium as well as the platinum that they produce, and it is only produced in Russia and South Africa. We could see support come into this market really at the $1288 to $1300 mark. We'll have to see how that bears out. This has been Gary Wagner, wishing you as always good trading. I'm sorry to report a small loss today, but we'll get back at it tomorrow. We will talk to you tomorrow for the weekly wrap-up and review.